Welcome back to the channel, guys, and welcome back to another backtesting video. Sorry, let me just sort out my creaky chair. Okay, so following the last session, what was my takeaways? Ultimately, I kind of felt it was a poor trade. Let's just maximize this. Ultimately, I felt it was a poor trade. Why? I think that with institutional order flow being bearish, if I'm going to long the market, then I need to reduce the number of models that I'm looking for and focus on specific ones that specifically focus on high time frame key price levels and specifically daily related key price levels. So one of the things that I've understood and taken away from that is for counter trend positions, that's what I'm going to do moving forward. That to me presents the best risk reward opportunities for myself, best risk and capital risk management and capital preservation opportunities. So that's what we're going to focus on. And also as well, I think it will keep me out of any silly trades. So unfortunately, you got to take the losses on as part of doing business, but in losses, like I said, you don't lose, you learn, and that's what I took away from that. So I've made a note of that. So we've taken counter trend trades to the near term high time frame institutional order flow. Then the setup must be a high time frame model. And specific one at that, not to do with imbalances, but to do with external range liquidity. Anyway, so what we're going to do is we're going to move on. I'm going to, that was Friday, and also I've got to consider about Fridays as well. I don't think Fridays is necessarily a favourable day to trade, but I think at the same time part of that decision was really invoked by just the poor trade that was ultimately taken. So let's start to reanalyze. So I tend to come out to the weekly to have a look at ultimately liquidity pools, which we can see here on ES and YM. Ultimately, there's a liquidity pool down here. I'm just gonna have a little bit of coffee. And that certainly could be a draw. So that's an old weekly low. So we'll mark that up. But actually, no. Sorry, tell a lie. Before we do that, what we're going to do is just go back to the hourly. Sorry, that was Sunday. So we want to go to next day open. And we've got so we're into May and we've got a busy economic calendar. It's weird. Go to next session. Okay. What day is that? Okay, go to next session. We'll go one more. Okay, so now we're going to go out to the weekly, just because you see what we've seen is now how, if we go back to the daily, we can see how Monday purged that low. Okay, it's Monday purged there. So, as I said, we've got the old low weekly here. Okay. And just going to mark that off here as well. That was purged a long time ago on NQ, so we're not necessarily going to focus on that. Got a weekly fair value gap up here, but I'm also going to focus on that as well. What I'm actually going to do is drop down to the daily time frame, where we have obviously this imbalance where a level of reaccumulation took place. Okay, so got that. I want to look at the aligned level, so I'm going to copy that. And the aligned is here. Perfect. Take that out one. And we have this here. Okay, so then we want to look at, where are we? So that's Tuesday there. So what we've got there is previous weekly high. So yeah, so it's Tuesday. So I want to copy that as well. Now it could be a different day. And I think that these two actually represent relative equal highs. Okay, so we have that. And yes, we do have this old daily high here, which, you know what, I will mark up. There will be resting liquidity above there, although I do believe the market will look to take out both. I do believe that there is resting liquidity there as well. Okay, so we've got that low, and then obviously we've got this high here, which we don't need to necessarily annotate at present. Obviously the market found support, the bearish order block, we price lower, and then obviously we've got yesterday's yesterday's price action, but anyway, so we've got these two key levels above the marketplace. I do want to, like I said, just go and just gonna have a quick look now on the H4, see what we're working with to complete all of our annotations. Okay, so I just want to jump back out to the weekly. If there's anything that, so potentially we're going to mark that as unconfirmed, and I mean, we're going back a few weeks. I'm going to leave that because well, actually no, I'm going to pop this in. I'll put this unconfirmed, but I'm not going to do it. I'm going to do it as that for now. what that will signify moving forward is kind of a weekly Kraken correlation, but obviously I don't trade off a weekly Kraken correlation, so that's not what it's necessarily going to imply. Going into the daily, yeah, we've got a Sibi there, but not too worried by that. Market could reject from there, to be fair. Okay, so I want to go down to the 4 hour. We're obviously into Tuesday, so we want to have a look at Monday's price action. Okay, so that's Monday's low. And not necessarily too interested in drawing out the high. And then we've obviously got this high that formed. Okay. And then we do have some highs over here as well, which we will put in. Okay. Okay. This one up here. Okay, so we want those. That candle is only just open, so not really. Okay. So we want to annotate this high up here, like so. So we've got a lot of liquidity above the marketplace. Furthermore, one of the most important criteria so I think we just want there we go. So I'm just going to mark up this Sibi. Potentially a model forming there with the rejection from Okay, so potential that. And potentially with ES and NQ, which is good. Not sure necessarily that that's going to pan out, but just noting it for the time being. Okay, so let's get into some analysis. Kind of went through that. We're into a new month. So NFP. So the and we've got federal funds rate on Wednesday. So we really want to try and identify a trade, ideally today if we can. If we can do that, it would be great. Otherwise, we'll just have to see how the week pans out. So we're to the 3rd. So for May, let's see if we can pick up pace, see what we're doing. Okay, so institutional order flow. Let's just jump back right back out. So clearly weekly's bearish. We can see that unfilled fair value gap here. You can see that, and we can actually see that on well, not on all three not on all three members, but ES and NQ, we're certainly seeing that. So institutional order flow from a macro standpoint is bearish, and we can see that as well. So we can take our previous notes because they haven't actually changed initially. Okay, so we're going to take that. So I have also noted the break away gaps on the breakaway gaps. Maybe it's just the breakaway gap on the weekly time frame. Supporting weakness and further lower prices from a macro standpoint. Okay, so that's from macro, and that is relative to the daily and the weekly. So if we go and look at the 4 hour, I want to see what what are the ultimately what are the 4 hour fair value gaps saying, and also what is the market structure. Bear me just 1 second. Okay, I'm back. If we just go back out to the daily time frame, we also want to see what are the old lows and highs doing, and we can see that we are ultimately displacing through old lows. So old highs sorry, we've got to specify the time frame. So relative to the daily time frame, old highs being manipulated, whilst old lows are being displaced through. So we know that institutional order flow is bearish from a high time frame standpoint. Therefore, we can only look for specific models if we want to go bullish, as opposed to having sort of the arsenal of models if we want to trade bearish, until we've had some form of confirmation that high time frame institutional order flow is bearish. So we'll make that note. Okay, so we want to drop to the H4. So the H4 we can surmise and say that that is still ultimately bearish as well. NQ potentially has flipped, if you will. So relative to the H4 TF, ES and YM remain bearish, appearing to find support lower from the CB H4, whilst NQ has traded through its initial CB H4, indicating potential bullish PA near term. So we've got to be mindful of that. But overall, high time frame IOF equals bearish. Okay. So now I want to go to ERL/IRL. So we've seen the market purge the old low weekly. And yes, there is a sort of a wide standard cracking correlation at the lows potentially, but I'm not looking at that. I would need to see a more near-term cracking correlation before I would remotely look to support potential higher prices, and we haven't seen that yet. We've seen symmetrical price action down here. So in terms of ERL, IRL, I'm still favouring IRL to external range liquidity, unless sort of proven otherwise, right? So, but if we go, we want to really concentrate this on the daily or the weekly time frame, and I don't think the weekly is clear per se. Let's purge some lows. That SMT is not being confirmed by anything to support higher prices. So I'm still very much in the camp of lower prices. And we kind of seen some of that being delivered. So we've seen the market purge the low. Okay, so this is not clear at present, in my opinion. Okay. Let's put my word back on. So, yeah, this is not clear at present because obviously we've seen a purge at the lows on ES and NQ, and we've seen a rejection, and certainly the near term low as well. But it's not clear whether it's ERL to IRL. It's not clear. Or IRL to ERL. It's not clear. So this is not clear at present. We'll be looking for further clues on the higher time frames to determine the next true high time frame DOL. However, with high time frame IOF being bearish, I would support a move lower for a deeper purge of the lows. That's what I would suggest is more likely. I'm not saying that this would be the case. I'm making the assumption and the point that that's more likely until we've had further confirmation of higher prices. So SP, so we want to drop down to the H4 time frame now. So here I have the reason why the highlight is useful is because it tells you where these key daily levels are. That's not one. If we go through, well, it could be. In fact, I'm going to change that to the previous day's high because it is technically. And obviously that was purged. Okay, so I have noted the clean and clear swing point referencing the previous day's low. And where near-term resting liquidity would reside. This key price level has formed below the true week open. Therefore, if an high time frame cracking correlation would occur at that aligned level, this could support and high probability trade idea. Okay. so in terms of previous day's high, we, apart from YM actually forming one and still intact, and to some extent ES, there isn't really one. So that's why I haven't marked that. But the high time frame, sorry, the H4, the old high H4 could be used as a potential trade lower. That is plausible. It's definitely plausible. Potentially a BPR forming in there. We've certainly got an inversion fair value gap. Certainly worth noting. Again, I only use inversion fair value gaps more so for confluence than anything else, and they obviously can be converted into balanced price ranges if if necessary, but we'll just do that for now. Okay, so we want to have a look at TOs, and it's safe to say that all IFT members are currently trading below their respective true week open, which, if coupled with high time frame cracking correlation, could support high probability longs. Just give me a second. Okay. Right. Okay. So cracking correlation. I have identified a potential PDA SMT, the highs within the CBH4, which, if confirmed, could support lower prices. That's currently in play right now, I would say. Okay. But outside of that cracking correlation, I'm just going to move out to the daily. It doesn't appear to me that there's anything anything significant. We've got pretty symmetrical price action, other than the cracking correlation that we've seen at the lows, which again we can note that there is also a high time frame cracking correlation at the lows seen on the weekly time frame. However, I would need to couple this with a monthly cycle or weekly cycle to confirm higher prices. Okay, so that's what I'd reference there. Okay. So we're going to go on to game plans, and now we're going to drop down to the hourly time frame. We've got some key levels mapped. And look at that level. It's been purged on all of them now. We certainly have this level here, which we could say has essentially left that, but this is still okay. Right. Okay, so let's crack on. So we've seen this low time frame Kraken correlation. We can mark this up as what they are because because we know what they are. It's true in London as well. Let's just check. What's the time? Yeah, 4 o'clock. So we definitely have those that we can mark up. We don't need to be cute about it and whatnot. This SMT doesn't mean that we're getting into a trade right now, but this could be a catalyst for. This could even be a catalyst for further high prices. The market trading down into a certain level. We're below true week, so I wouldn't want to be selling from here unless something significantly forms. But we'll see. And so we've already purged the London low, and the market's displaced through. That could suggest further lower prices, but would have to see. What I'm alluding to is this level here. Okay, so establishing. So let's just drop back out to the 4 hour in terms of what we want to see, game plans. So we're currently below the true week open, but for bearing in mind that institutional order flow is bullish. So number one, if we're going to be bullish, with the market below the true week open, if to see higher prices, which would be a counter trend move, the market would need to purge the previous day's low, forming an high time frame Kraken correlation confirmed by the low time frame confluences to support higher prices. So that would be one. Okay, so a number of things there. So in essence, we're looking at this key price level down here. Okay. Now, for shorts, bearing in mind that potentially shorts are already underway, potentially, and really only no, actually, all three have got the same. All three have got the same SIBI. So, for lower prices, if that SMT was to stack up, if the market confirms the high time frame the PDA SMT seeking lower prices, then if we note an H1 displacement, can't spell displacement, and then an low time frame cracking correlation in the form of PDA SMT or a time frame SMT. This could set the stage for lower prices. Okay, so fair bit would have to be done there. Fair bit would have to be done there. And I guess the other one would be if the market traded above the true week open and into the SIBI H4 whilst also purging the old high H4 but forming high time frame, or we could say low time frame. It's kind of it is a high time frame, but it's a very it's low. It's of a lower level of importance than say at a daily level. Let's put it that way. So a high time frame SMT within the SIBI H4. This could support lower prices. Okay, so we've got three. So now that we've got three, bear with me. I've got this chair so creaky. Excuse me. Okay. So news at 10. So let's just drop down to the 15. Put in our brackets. Okay. So we've got news at 9:30. Oh, sorry, equity open, and then we've got news at 10. So that's going to be a really interesting period there. Okay, so what we're going to do, I'm going to go back out to the hourly, because in terms of the models that we've set, predominantly we're looking for an hourly move, right? So, well, actually, before we say that, let's go back out to the hourly. So hourly, let's have a look. Probably unfair to take this from the hourly. Yeah, it's delivered its 2R. Delivered its 2R even on the hourly. Okay. So, we obviously had, as I said, we've had this SMT that supported this move, if you will. So we're gonna have to play on. I'm gonna leave it on the 5. Play on till 8:30. But in all likelihood, the move may not even occur till after 9:30. Okay, so just want to take a look at where we are, mark up some sort of key price levels. So we've got in terms of like key price levels, I mean, this is not, no, actually, sorry, don't want to do that. Let's just mark this up till there. So SSL H1 could well be a target. So again, we know what we're looking for in the event that, I mean, this is not confirmed. I will, not keen on doing that, but we'll see. There's only one key price level that I'm looking for any longs, and that's going to be from down here. So to me, that's a bit unlikely, but we could see shorts. We have got this high time frame displacement supporting potential higher prices. We'll go back out to the H4. Other than, as I said, this here, which in all honesty is confirmed the bullish order block, I would want to see a cracking correlation to support higher prices before I engage higher prices. This wouldn't do it for me. I mean, we are going back all the way to, what was this? February. Is a cracking correlation. That's just not in my remit, not in my model. So we're going to go back to the hourly. Let's we ultimately need to get to the news embargo opening, which has just occurred now. So let's now see what price action does. I'm going to drop to the 15 and drop this down to M1. So again, we've got our models. This could move higher, and if it does, it does. But let's see. Waiting to see what happens at equities open. As far as I'm concerned, we haven't taken out any. Let's go back to the H4. Any major liquidity to the left, major liquidity pool. We haven't done that. So that's part of my rationale as to why I would need to see a cracking correlation at the lows before supporting higher prices. I still would prefer, my preference is bearish, but I'd like to see the market trade above the true day open. So we're getting closer to equities open. Okay, so sort of jump back out to the hourly. So there was nothing there. Seemed to be forming an imbalance to the upside. So we'll have to see how that pans out and forms. But I'm looking at price action right now. There's nothing. We're just inside of a range, probably even a 4-hour range, maybe. So yeah, there's nothing that I'm looking at and would think compelled to engage. Equities open now, so we should see some volatility into the market. Interesting. Market as okay, so although yes, a low time frame correlation, let's just venture out, see what we've got. H4. That delivered to 2R, so that's the reason why I wouldn't be looking to engage back off that and take lower prices. I'd need to see a new cracking correlation form in order for me to want to engage. So let's continue. So remember specifically what we're looking for in terms of our models. We want to see H1 displacement lower if no, hold on. Yeah, H1 lower. So going to jump out to the hourly chart. Want to see how this candle closes. Okay. Right. So cracking correlation at the lows there, low time frame. That's not going to interest me in the slightest. So okay. The market's just in a sideways chop right now. Not really doing anything of noteworthy. As you can see, no cracking correlation at the highs. Yes, we had it at the lows, but that wouldn't support a trade idea for me. We're looking for 3 very specific models, and I haven't seen any of them to the contrary form yet that would make me think about engaging. Yes, looks like it wants to take up higher. May not have the chance now. So trading away from the midnight open. Still no displacement. And we're outside the trade execution window now, so let's just see if we purge that old high. Okay, so we have does NQ want to drop down from 15? Is looking rather bullish, got to admit. And we're approaching New York lunch. Oh. Unfortunately, guys, that's it. The market just sort of got into a bit of a chop state. I'd outlined specifically the models that I wanted to see. Nothing formed in relationship to any of those models, so I've just sat on the sidelines, and that's where we'll remain. So yeah, nothing to report back here, but a solid session. You know, tape reading, really understanding exactly what I was looking for via my models, going through my technical analysis to make sure that I've identified high time frame institutional order flow and sponsorship correctly, and various other bits and pieces, which I believe I have. So yeah, my rules kept me out of the market, which is no bad thing at all. It's a pretty darn good thing, and the introduction of the new rule around the high time frame draw and liquidity, I think, is going to be worth its weight in gold. So hopefully you took away something from this episode. I'm going to leave this one here. Again, if you enjoy the content, please hit the like button. And if you really like the content, please subscribe. I'd love to sort of have you as in my subscription list and look out for you and engage and so on and so forth. So anyway, going to leave this one here. Hopefully you enjoyed it, and I will catch you guys in the next one.